Okay, it is 10 o'clock in the morning on the 8th of April, and I thought I'd throw this up. I got a note from Joel last night, and Joel says, "Good evening. How are you and the family doing?" It's very nice, thanks. Um, we were at the pool. I'm having trouble calculating problem 2 of chapter 8. More specifically, I'm looking for the units of production part where it asks to insert the year 4 depreciable units. Can you please help me solve this? Here is a picture. So I thought I would go in order to solve this. I would go through chapter 8 homework in its entirety, just so you had it on tape and on YouTube, if you will. So here goes. Chapter 8, number 1 is right here. And bear with me. Let's see. So if I'm looking over at my other screen, it looks weird, but don't worry about it. Kimberly Construction, lump sum purpose, lump sum purchase of several assets on January 1st. And so this is getting you to depreciate. Here's the explanation down here. Accelerated depreciation does not lower the total amount of taxes paid over the asset's life. Okay, that's pretty simple. Let's go to number 2, which is where Joel lives here. A machine costing $211,600, 4-year life, 16,000 salvage values installed at Luther Company's factory. The factory manager estimates the machine will produce 489,000 units of product during its life. It actually produces the following units: 122,700 in year 1, 124,200 in year 2, and so on. The total number of units produced at the end of year 4 exceeds the original estimate. This difference was not predicted. Okay, let me check Joel's text again. I'm looking for the units of production part where it asks to insert year 4 depreciable units. You can only depreciate it to its salvage value. Is the basis of what I'm going to show you here. But as you can see, here's the straight line depreciation. Pretty simple, 40,900 a year. And of course, you know the equation for that, but I'll show it to you anyway. Here's the units of production for my numbers, right? And you can see down here, 4080, 49,680, 47,960. And that gets you down to, where's the salvage value? 16,000. So we don't get there, which is good. Here's double declining balance. Okay, in this one, it does get down to that 16,000. So let me show you the explanation. Here's the straight line one, 195.6 divided by 4 is 48,000. Here's units of production. So in units of production, you do the cost per unit by getting 195.6 divided by 489,000 units, gives you 40 cents a unit. It's nice, easy number. So it gives you this depreciation of $49,080. Now, see the asterisks here? Here's the trick. And this is what's going to buy. Take only enough depreciation in year 4 to reduce book value to the asset's $16,000 salvage value. You don't want to go below that in your depreciation calculation, below that value, that salvage value. So that's sort of what usually trips up students. And I hope that answers your question, Joel. Here's double declining. And notice that it's rounded. These numbers are rounded. 26,450 anyway was rounded, and the 19,000 or the 10,450 in year 4 was take only enough depreciation year 4 to reduce book value to the $16,000 salvage value. So I hope that clears it up. I'm going to go through these other ones. Here's number 3. Here's Yoshi Company. And here's the 3 tabs for my my numbers, and 3, and there's the general journal, how it would look under these circumstances, and the explanation, which is probably, it's so simple. Anyway, January 1 of year 1 is 22,000, and record depreciation in that at the end of the year. There it is. Okay. Number 4 is more, 4 through 6 is a complicated one, but it's really just more of the same. You're going to journalize first in number 4. Machinery cash, right? To take that depreciation. All right, 8,000, 1,600. Yeah. And next is 5. Prepare journal entries to record depreciation of the machine on the 31st. There it is. And here's the explanation. 297,600 in my case, minus is 34,560, divided by 6, of course, for that period. 43,840. And number 6 is here. These journal entries prepared to record the machine's disposal, and was there a gain or was a loss from the fire? It was an insurance question. So here we go, and there's the explanation on that one. And I hope I showed it clearly. Yep. 4, 5, 6, and there's one more. There you go. Right of use asset and amortization. Falk Company signed a contract to lease space for 3 years. This is how you would do that. Prepare entries to record the lease asset obligation, and these are things that you're going to run into in business, even in small business. So it's good to know how to do this. Pretty simple. Okay, that's what I have. This is my day job. I watch the market all day. I don't know if I made that clear, but I'm particularly looking at a stock called Mesa Air Group that we've owned in the past. And my dad keeps saying to me, I want to take a position in this again. And he doesn't say it like that. You know how he says it? He calls me and says, what the hell's going on with Mesa? This is the only airline that I would own because they actually have earnings per share. And I can show you that in another. All of the airlines, this FinViz is a screener, and it's free. This is one you can use. I like to be on free stuff so that I can show students what I do. So it's a little glimpse at finance. It's got a search box up here, and you can put any ticker symbol in it. A ticker symbol is shorthand for the stock on the New York Stock Exchange or the NASDAQ exchange. Mesa is MESA, oddly. These are the planes that come into Aspen and these small mountain airports. It used to be a division of United Airlines, and they spun it off. But as you can see, we bought it here, and we sold somewhere in here. So we took quite a profit in it from. No, we bought it at $3. We bought it way down here, 3 something, and we sold it at 8 or 9 in that area. So we made a nice profit there. But what I wanted to show you was here's price per earnings is 15 times earnings. What are their earnings? Their earnings are 86 cents per share. They made money. Even during COVID, they made money. So I really I like this airline. But this is very concerning to me. It's a little frothy right here. I don't think it's a good entry point, and I sort of made that case to the old man. But this trading view, This is another one I use, but I pay for it. And it has all sorts of tools and stuff. These are all stocks I own over here. And this is no, I'm not giving financial advice here. So, invest at your own risk. I do. But anyway, they're down 23 cents today. So he wanted to take another look. You always buy on a down day, so you can get in. Anyhow, that's what I'm up to. In an interesting, um, when you study accounting, that's called fundamental analysis of a company. Fundamentally is uh, what is the company doing? And I go down here and I can look at their financial statements, a glimpse of their financial statements here. And like I said, I don't get their premium. Uh, I do for TradingView, but you can go online and get any publicly traded company's 10K or 10Q, their quarterly report or their annual report, 10K annual, 10Q quarterly. And you can look at these numbers live, as they come out. This software has conglomerated them here, so I can look at their total revenue, their gross profit, things we're learning, right now. Down here is net income, 30 million. This is in millions or thousands, I think. Yeah, so they made $30 million despite the horrendous black swan event of COVID. Um, this is insider trading. These are all the insiders in that company, CEO, directors. The directors would be on the board of directors, like I serve on several boards. So what are they doing? Well, it looks like they're selling their stock. Is that a good news or bad news? Or are they, if they're being compensated in stock, you may go work for someone and be compensated in stock. Uh, this just gives you an idea of who's selling and who's buying and what they're doing with their stock holdings, because that's public information. And this section of this software is an algorithm that um, looks at all the news out there, and I don't know how many news outlets they look at, but every time the word Mesa comes up, it gleans it and puts it onto this page. So it's a giant sifter, an algorithm that just goes out and looks for every piece of news everywhere the word Mesa, the company Mesa comes up in any literature, and you can see that Zacks or Zacks blog highlights, and if you click on them, it'll come up. Here it is in remember Jack in the Box? We talked about that the other night. Uh, but here it is. It's somewhere in the body of this article, Mesa is mentioned, so it must be maybe favorable. I don't know. Will Mesa gain and rising earning estimates? So you all this information out there, and if you do your homework well, you may invest well. To me, after doing this for oh God, I started when I was like 14 or something. I was very young, and um, the way investing was introduced to me, and especially stock trading with my dad was whoever does the most work is going to win. It's just like being a lawyer. If you've ever run into legal difficulties or been with a lawyer, or, had to hire a lawyer, um, it's not always about the truth in court. It's about who works harder, makes a better case. I've fired a few lawyers in my day, but it's the same thing with making money in the stock market. You're trying to make money higher than 50% of the time, regularly, $1 a day, a million days, $1 million. You're not trying to hit it big. Those people don't make it. But anyway, I thought you might be interested in that. The one thing I wanted to, that's fundamental analysis, the financial analysis that we do. We as accountants, we do that, and fundamental analysis includes things like who are the directors? What are they like? Are they good people? fundamental, and looking through all those articles, that's kind of fundamental analysis. This, what I have going here on this page, is called technical analysis. Each one of these candlesticks, we call these candlesticks, is a day of trading. These lines up here and down here are called Bollinger Bands, and the Bollinger, and this is the average of those. The Bollinger Bands go at 30% and 70% of the mean of the average mean. It's a measurement that uses statistical analysis to try and, because we know mathematically that things tend to move towards the mean, you can look at these Bollinger Bands and say, well, the stock's going to stay between the bands, and when it gets outside of the bands, it's going to go back to the mean. And so when I look at this, I say, well, I think it's probably going to go down here and test the bottom of this band and then come back to the mean. How much does it do that? I don't know. These other lines that I've added, these are all things that I've added. And I can customize this any way I want up over in this corner. But this down here is a what we call a moving average. And it's the moving average of 50 days, and this is the moving average of 200 days. And so when you look at let's say a year of this, and you go, wow, that's a big move up there. You may think mathematically, if you understand mathematical models, you'd say, well, it's got to go down and touch these averages. So it went too high too fast, right? Now, is it perfect? No. Is there danger? Yes. Might it go straight up, even further? What's the company worth? That's where evaluation, fundamental evaluation of the balance sheet, the income statement, the statement of cash flows, the statement of owner's equities, those 4 statements that we work on, that's where that comes in, where you say to yourself, is the company worth X times earnings? Is it worth 15 times earnings, right? Should it be, that's average price per earnings, about and almost perfectly average. Most companies run there. I can show you a company like not a real company like Amazon that I would say is a Ponzi scheme. They've been trading right about in this trading range here for a while, but you can see it's getting frothy again. I would be selling it, but the PE is 78. That's way high. But the real PE, because this EPS number is not real, in my opinion, is somewhere in the thousands. Let's look at a real high flyer like Zillow. Oops, Zillow Group. Is that it? ZG? No, that's the other one, isn't it? They lost 80 cents. Let's see. There's always a description of the company down here. Digital real estate company. Nope, that's not. Oh, that is Zillow. You know what I was looking for? Zoom video. There's 2 Zooms. ZM is this one. And again, we bought it down here and we sold it up here. We made out really well with this last year. But you can see that the trend since November, since the election, has been down. But look at their PE. They made $2.25, but their price per earnings is still 100 times. So where does the stock really belong? Probably down quite a bit lower in real value. So this is what the difference between speculation and value investing is. And anyway, I thought as long as I've got the recording going, I'll show you what I was up to today, and give you a little glimpse of what it is that I do on a regular basis. I spend a lot of time reading and looking at screens to try and trade the market. So anyhow, I hope I answered your question, Joel. And if anyone else has any questions, please shoot me an email or put it up on that discussion board in Canvas is really the best way to do it. And so anyhow, that's enough of that. I will talk to you all on Monday. Let me find where my cursor is. There it is. Okay, have a great day.